We're seeing not just a lot of gold flow to the US in the last few months, like over 2,000 tons, but a lot of silver also is flowing. I think the bullion banks are, yeah, they're trying desperately, and I'm sure they keep track of the gold and silver bugs and the silver squeeze, and I'm sure they've done their darndest today to keep the paper price down on silver squeeze, but I think it's just delaying the inevitable. Yeah, eventually things like that are not sustainable, they fail. And when people want their physical.
We present the clips of Mario's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pin comment. Stay ahead of the curve. Don't miss out.
I was looking past weekend I think on the live stream with Clive, and silver actually up until Friday, year to date, is outperforming gold by 1% or 2. So I think the reason people are frustrated is because gold is making all-time highs, like there's no tomorrow, and silver is still stuck here in the mid 30s or so, and the all-time high is 50. But as I said, patience I think is needed, and stop buying ETFs, buy the physical, and there's no excuse, in my opinion. I've never bought a silver ETF, and if you remember, I mean, I've spoken in the past about how all the gold prices in different currencies have been going up, and how the Japanese yen has been leading this race down to zero. But we're also seeing now that in other currencies, silver is actually trading to new all-time highs, like with the Canadian dollar, with the Aussie dollar, they're trading like above 50. So I think yeah, that's what's going to happen. And I think the fundamentals for silver are still really good. 5 years of deficit in the silver market, i.e., there's more demand than silver that's produced or recycled. And we're seeing not just a lot of gold flow to the US in the last few months, like over 2,000 tons, but a lot of silver also is flowing. And who's to say that another billionaire or another two or three is not going to emulate David Bateman? I think is very possible. And yeah, I think the bullion banks are, yeah, they're trying desperately, and I'm sure they keep track of the gold and silver bugs and the silver squeeze, and I'm sure they've done their darndest today to keep the paper price down on silver squeeze, but I think it's just delaying the inevitable. Yeah, eventually things like that are not sustainable, they fail. And when people want their physical, their argument is that they hedge it on the LBMA. And they buy these OTC promissory notes or forwards, which forwards are just another future. And we've seen that in the LBMA, these OTC promissory note contracts are just they're not really physical. If they were physical, the Bank of England wouldn't have like a delay of like a month to 2 months in delivering gold. And yeah, so when they come out and say, "Oh, you guys are crazy," these massive shorts are covered because we're long in the LBMA, but they're not really long physical, and that's the problem. But eventually, it will come out. People are waking up to it, and I think Eric Young, aka King Kong 9888, he's done a really good job of explaining how they use the EFP mechanism to execute this scam. of pretending that paper is physical. And EFP stands for exchange for physical, but it's all settled cash. So basically, the LBMA is like a bucket shop. Bucket shop. There are kinds of brokerages in the early 1900s where you could bet on the price. You weren't buying any stocks or selling any stocks, and I think that's what the LBMA is. Comex, to some extent, is also a bucket shop, but it's not as leveraged as the LBMA because there's no regulation. The LBMA, the banks that trade in London, they're not regulated by the Bank of England. They're like self-regulated, so they leverage many, many times over. While Comex in the U.S., the leverage is less. It's about, I don't know, Comex, you have to put 10% down. So it's not as much as leveraged. No real news, but I've seen someone post recently. I don't remember who it was, but if you look back when gold made its big runs like 79 to 1980, there's a huge crisis then, a recession. Paul Volcker had to let rates go to 15%. So it was forecasting some trouble ahead. For some reason, gold does that. And back in the 2000s, yes, gold was in a bull market from '02 to like 2011, but it really started picking up like in 2007 all the way to March 2008 when we topped at 1,000, and then we had the subprime crisis, and then we had a big move up in 2011, and that forecast the European sovereign debt crisis. So I think what's going on now, there's so much out there that is how can I say, pointing, well, there's some indicators that are worrying, like the Japanese government bond market, the yields there are going up very quickly. The Japanese yen is strengthening. US Treasury yields are still really sticky. They're not really going down as much as people expect them to. What else? The stock market seems to have topped. We're down on all the three indices year to date. So yeah, I mean, as for today, it's just a continuation of what we've been seeing. So yeah, I think gold is pointing to trouble ahead, but it could also be pointing to something that I've been like warning about for years since I started this channel, and that's hyperinflation. And I think it could happen, yeah, very quickly. And hyperinflation is not really anything to do with cost push inflation. It's more to do with confidence in the currency. And we have to admit, I think, that confidence in the political and the leaders, central bankers of the West is at rock bottom, I would say. Maybe not in the US, but it's still very divided. Here in Europe, they're using lawfare like they tried on Trump, and they've banned the Romanian guy who won the first round last year, presidential election. They've just banned Martin Le Pen. Is it Martine? Or yeah, Le Pen from running for president in 2027. She will appeal, but it all seems to be falling apart. The social, economic, political environment. And when that happens, Elijah, trust in the currency evaporates because the currency is issued by the establishment. So you know, people might want to trade gold, but I'm going to hold on to it because I don't want to trade gold for collapsing fiat currencies. And that includes the dollar, the euro, the pound, all of them.